Paulson of Wells Capital Management there saying he thinks the U.S. can handle tipping over the fiscal cliff and saying extreme volatility in the build-up to December 31st could be a buying opportunity. Well, let's take a look at U.S. markets. As Sri was saying, they did eke out very thin gains overnight. Here to tell us about it, Yu-Dee Chang is Principal and Chief Advisor at ACE Investment Strategist. He is joining us live from Washington, D.C. Yu-Dee, do you think the tone of investors is starting to change a bit? Before it was, we have to have a deal by December 31st. Now it's more like, well, you know, mid-January, end of January wouldn't be such a bad thing.
Absolutely so. I think that is exactly the tone, myself included. Actually, I think eventually they'll get a deal done, right? Churchill says, which is absolutely right. Americans can be counted on to do the right thing only after they have exhausted all other possibilities, and that seems to be exactly what they're doing. Political posturing is exactly what they're doing. Right now, both sides are still pretty far apart. I think on the so-called tax increase-wise, they're about $800 billion apart. On spending cuts, when so-called endowment spending cut-wise, they're about $400 billion apart. So I don't think they'll be able to get it done before December 31st. But in the middle of January, I think they might get it done. I think the market, I agree with the gentleman, the market probably will be able to handle it because I think a lot of it had already been factored in.
What about next week, Yu-Dee? The focus turns to the FOMC. How likely is it that we will see some further accommodation in the form of an extension to Operation Twist? And if we do see that, how much is that going to be worth for the market?
Yeah, that's going to be worth a lot. I think right now the expectation is that the Fed will somehow extend Operation Twist, which expires next week, like you said. So that's pretty much expecting that way. So if that does not happen, I think it will be a little bit downside surprise to the market. But if that does happen, it will lend some support to the market. I think even more importantly, people are now start talking and speculating whether Bernanke will be talking something about physical cliff. So that still remains to be watched as well. So you're right, extension of the Operation Twist, as well as whether Bernanke says something about the physical cliff.
Yeah, do you think he's going to go out of his way to reassure investors as we approach the end of the year with the fiscal cliff deadline looming? Will he say, we're going to keep rates low, don't worry, we're going to be here to backstop anything? And what are his options, Yu-Dee? What can the Fed do if the economy does go over the cliff?
Yeah, there's not much they could do if we go over the cliff, and that's what everybody agrees. That's why they need to get this deal done, and that's why they're expected to get it done, but there's nothing. I think pretty much the Fed has pretty much shot all their bullets. Right now, he could come out and say things to soothe the market a little bit, but if the deal doesn't get done, in my estimation, it's probably about the middle of January. If we don't get it done by the middle of January and continue to drag on and kick the can down the road, the market is not going to react favorably. So they could go over it by a little bit, but they really need to get it done by the middle of January. That's what traders are thinking.
And there's a debt ceiling negotiation coming up as well. Do you think the U.S. AAA rating is in danger from some of the other ratings agencies, not just S&P, who've already cut?
Yeah. That's a fantastic question. I don't think in the immediate future, right now, that issue is off the table, right? Obama wants to, does not want to include that in the discussion, and he wants to have the sole rights to increase that debt ceiling, where Congress is saying that there's no way we could do that. So I don't think that issue will be resolved for sure until the next Congress is in session.
So if we do get a cut in the U.S. debt rating, would that move the bond markets at all? Would it affect all those investors who feel like they're tucked away safely in the Treasury market?
Oh my God, I don't even want to think the possibility of that. If we get just look at August 2011, what kind of volatility we had in the market and what kind of downside we went through, right, in the markets, not just in the U.S., but affected the whole world. So hopefully, U.S. do not get a downgrade. If it does, I'm sure it's going to have a major negative impacts on various markets.
So are we going to continue to remain stuck in this range for the S&P, Yu-Dee, between now and, let's say, mid-January, off between 1385 and 1420? Is that the new normal?
Yeah, I think so. I don't necessarily know about exactly the time frame of it, but I think before the event, the so-called event frame of it, I really do agree. I think right now, nobody's that bold like us. I'm actually bullish on the market based on the technicals. However, with the physical cliff overhanging, we're telling our investors to be cautious and not to be too much in the markets ourselves, right? So I think the surprise, well, not the surprise, the reaction should be to the upside should the physical cliff get to be resolved. But like I said, though, it really, if it does not need to get resolved by December 31st, they really cannot drag on for too much longer. Maybe by the second week, maybe the latest third week of January, it needs to get resolved.
Okay, going to put you on the spot. How much upside is there once this is finally resolved?
I think about another 10% or so from this point on. I think we rallied about 4% or so from the bottom already of middle of November. I believe there's another 10% to go once it gets resolved very quickly.
Okay, thank you so much, Yu-Dee. We've got a lot more ahead with Yu-Dee Chang of Ace Investment Strategist. If you have any questions for him, send us an email. The address is squawk@cnbcasia.com, or you can also get us on Twitter. My handle at LisaCNBC, and Shree's handle is at CNBC Shree.
It's FedEx's busiest day of the year, counting the total number of orders in the pipeline at any stage. CEO Fred Smith estimates the shipping giant will move a record 19 million parcels today. That's up 11% from last year. Part of the reason for the increase is the boom in online holiday sales. The more consumers click, the more FedEx ships. Now, FedEx is delivering millions of gifts ordered on Cyber Monday today and processing new orders that come in throughout today's Green Monday shopping. The second Monday of December, or Green Monday as coined by eBay, is often the heaviest online spending day of the month as consumers scramble to place those orders in time for Christmas delivery. Last year, Green Monday was Walmart.com's heaviest traffic day in December. The world's largest retailer again offering special deals today, hoping it eats itself, and shoppers have yet another reason to spend. Now, Comscore expects more than $1 billion will be spent online today, again ranking Green Monday as the third highest online sales day of the season.
And that was Courtney Reagan there with a special report on FedEx's banner day. We are back now with Yu-Dee Chang, an Ace Investment Strategist in Washington, D.C. Yu-Dee, a lot of people doing online shopping, busy with their credit cards, myself included, as we can see from what's happening with FedEx. What's your sense on the U.S. economy? Is it gaining traction? You think it's going to be doing better on a quarter-on-quarter basis from here? And how do you invest in that environment?
Yeah. I think so. I think based on what we see, physical cliff aside, no doubt, U.S. economy is picking up a little bit of steam. Slowly but surely, it's recovering. You look at the employment pictures, the unemployment rate is really dropped drastically, right? So you look at U.S. housing starts, that's been up about 25% this year, expected to be up 43% 2013. And if you look at the confidence consumer side of it, that's picking up also. So yes, I think if we could just sort of put all the physical cliff stuff behind us, get the politicians out of the market, the U.S. economy, I think, is on the way to recover. So I think next year should be a little bit smoother for the investors and the economy as well. I think the way to get involved is probably pick the right sectors, maybe dollar cost average yourself into this market.
Okay, I know you're a fan of real estate, as you just said. How do you dollar cost average your way in? What's the best way for investors to get exposure?
Yeah, I think real estate-wise, a lot of people, especially being, I guess, an Oriental descendant, you want to go buy real estate yourself. I think that might not be the way to do it because you don't want to just pick one region out of the U.S. U.S. on the overall basis have not recovered fully. However, if you pick the right spot, you talk about Boston, Washington, D.C., New York, Miami, it's really heating up there with real estate. So I think a way to get involved for the average investors is probably get back to some type of REITs, real estate investment trust. From the high they made back in 2008 when they crashed down about 70%. From the low of March of 2009, they're up about 25% or so. So they're still 60% off the highs, but I think this might not be at a bad time. Start to a little bit, I would say, maybe start getting 20% at a time to get into the real estate investment trust with the portion of the money that you want to get into real estate, that is. By the way, REITs also pays on the average about a 2.5% dividend. So to me, a portion of the money going into REITs is probably not a bad idea next year.
Speaking of which, Yu-Dee, is this also an opportune time to start accumulating dividend-yielding stocks, given the fact that we are looking at tax hikes next year?
Yeah, Yeah, I think I will kind of hold off on that a little bit, depending on the physical cliff, right? Because the dividend rates, if we go over it, it's going to go up from what? From 20% all the way up to almost 40%, 39 point something percent. So I would hold off on that a little bit, I think, on the dividend play going forward until the physical cliff stuff is over. Once it's over, if you want to get into some type of dividend investing strategies, it may be the way to go also.
Yeah, because stocks like Apple, they've been getting hammered because investors want to book those losses right now. I mean, how do you approach companies like this that are nice, solid dividend plays? They're expected to do well, but with the uncertainty, as you mentioned, over the dividend taxes.
Yeah, I think two ways, right? So if you have it already, some of it has tapered off so much. Like you say, Apple, if you have held on to already, you probably want to hold on. If you don't have already, that's why I keep saying this will be the perfect time. Let's say if you were to pick up Apple, like you said, maybe it's not time to go all in. Maybe you want to buy 100 shares of it, a total, maybe you just get in 20. As it goes lower, every certain increment, you buy another 20 shares. On the other hand, as it goes up, a certain increment, you buy into 20 shares also until you get fully invested. That it is the so-called dollar cost averaging, not only to the downside, sometimes also to the upside. That sometimes is a nice strategy.
So average your way in certainly makes sense. Do you own Apple, Yu-Dee, just for disclosure purposes?
Yeah, I do.
Okay.
I do own some Apple, but I also took some profit already too.
Okay, like many people have done, it's really been weighing on the stock. Talk to me about gold. How do you approach gold as we head into the end of the year and the beginning of 2013?
Wow, I'll tell you, that's a very interesting question. I tell you, gold has a lot of uncertainty on it too. Give you an idea, okay? If physical cliff gets to be done, then U.S. Financial status will be a little bit better. That should help the U.S. dollar, thus lower gold. But by the same token, if the U.S. dollar starts to taper off because of the financial crisis, gold is actually going to head higher. So gold right now, if you look, it's been in the trading range, 1720 to the downside, 1800 to the upside. I would tend to be slightly bullish on the gold, so I would like to buy dips on gold.
10 seconds or less, what's your approach to risk, Yu-Dee? What should investors be doing?
Wow, I think risk, to me right now, capital reservation is a little bit more important than build your capital gain. So I would rather be careful a little bit when the time is right, then be a little bit bold. That's the way to go, I think.
Steady as she goes. Thank you so much, Yu-Dee Chang there of ACE Investment Strategist joining us from Washington. Just ahead, as the impasse over the fiscal cliff continues, we're going to get the view from the bond pits after this. Stay with us.